Hello, money magnets and master traders. What a blessing of a day. Looks like the SPY is gapping down and Uncle is seeing major signs that a top is in. Question now is, will the bulls buy this dip? Because we are gapping down. As you guys can see, these last few days, the market makers has been teasing us with some choppy actions, some up and down moves, not clearing any critical resistant levels and not breaking down any critical support levels. But now, instead of giving us a traditional breakdown, looks like they're going for the gap down. As far as trading it goes, yesterday was a decent day. Uncle had, once again, that 684.5 level that I was watching. And I wrote to my Discord members, no puts unless 684.5 or 683 can fail as support. You guys can see that the breakdown of 684.5 was pretty fast. If you was quick enough to catch it, that's awesome. It does take some experience to get used to price action trading, but don't give up on it. But if you wasn't, always remember that there is always another setup to catch. There is an abundance of them. And in this case, it came in the form of breaking down 683 as support level. And I did mention in my Discord, really nice breakdown of 684.5 level and already hit the 683 level. If 683 fails next, 681 and 679 in play. No calls unless 684.5 can recapture. Once we had that breakdown on the 15-minute chart, I let my group know 683 failed as well, putting 681 in play. Once we broke it down and hit 681, I mentioned to the group, you want to take most profits here for a level to level move, because as you guys can see, it did attempted to break down 681, but we had a false breakdown in the next candle right there. False breakdowns are the setups you want to enter calls with, and I let my Discord members know, nice bounce with 681 recapturing. As long as above 683 is back in play with 684.5 above. We managed to hit 683. Bulls tried to go hit the 684.5 level, but they came just shy of it. And man, oh man, the bears are taking advantage and gapping down. So far, hitting my 674 level in the pre-market. This was the previous all-time pivot high back in early October. So this was the level that I was definitely watching for if we were to get a pullback. And now here we are testing it, because remember, this was a previous pivot high and we had that breakaway gap up back in late October. SPY never quite back tested that area as a support to give it a chance to turn into the new buy zone. And today we're going to see what happens. Will this level hold? Because if it holds, this could be a very nice buying opportunity. But if it fails, the bears will be in complete control. So how are we going to trade this? If this is a bounce, as you guys can see, I have a fib level at 675.62. If 674 truly holds as support, 675.6, 677 all must recapture to put 679 and 681 back in play. I'm bearish below 681, so if we do get a bounce and clear those levels, 681 is the critical level that I really need to see recapture. Because if we bounce from 674 and back test 681 and Uncle sees selling pressure at that area, that would not be a bad spot to try for puts with your stop loss above it. 681 holds as resistant, we're going to stay bearish. 674 fails as support, we're going to stay bearish, because if it breaks down, more downside incoming with 672.5, 671, 669. There's a number all the way down at 667 or lower in play. So remember, guys, the question for today is this a top or is this a buying opportunity? Like I said, if this is a buying opportunity, trust the bounce if 675.6 recaptures to put a back test of 681 in play, and we'll know a bottom is in if 681 recaptures. But if 674 fails, expect more downside, at least another $9 to $10+ move back to the downside. QQQ also gapping down. The main level that I was watching to know if a top is in or not is 625.6. We are well below that that currently. And if there is a bounce, I have resistance at 622, 624, and of course 625.6. If you're a bear and we end up getting some type of relief bounce, you want to see 625.6 hold as resistant, because as long as below that level, I'm bearish on triple Q. Now, bearish follow through would be to break down 622, break down 620, and the fib level at 618.6. If those levels fail, 617, 615, and 613 incoming, and I do have this uptrend line. If we break down 613, that will be extremely bearish. I'm already bearish on triple Q below 625.6, but loss of 613 will make this breakdown a lot worse, will make this gap down a lot worse, and will likely drop down to 611, 609, 607.3, 606, or much lower. I would not be surprised if we drop back below 600. So if we are to trust the bounce, as I mentioned, 622 needs to become support again, and 624 and 625.6 must recapture. Above 625.6, the bulls are safe, but as long as above it, I do favor we drop some more. Here is Tesla with this beautiful pop-up yesterday. I mentioned to my Discord members, if we clear that 458 level, you want to go long, and I had targets to the upside and they smashed all the targets, but this gap down is pretty big, and to keep it bearish, bears must keep price below 458. Bears follow through would be to break down more support levels, which I have at 455, 453, 451, 449.5, and the critical support level at 448. 448 is not only a fib level, but also based on my uptrend line. So if we break down 448, the bears would be in full control, and I do favor another 10 to 20 plus dollar move back to the downside. I have fib levels at 434 and 425.5ish. I'd like to see it get tested if we can break down those support levels I mentioned, especially 448. But if not, and 458 clears again, then we can get a bounce back to the upside. Most likely go hit 466, 469, and 470.7 again. Here is NVDA. This is a 1 hour chart for NVDA, and I was seeing a W pattern. It played out very nicely, but at the end of the day, they could not hold critical support levels, which for me was the 208 level. And now here we are gapping down. A top is in if NVDA can keep price below 203.8. As long as below that level, I am bear biased on NVDA. For bearish follow through, I need to see 200 and 198.6 fail as support. If that happens, at least on the 15 to 30 minute charts, that's your bearish follow through, and it should send us a lot lower, down to 197, 194.4ish, 193, 190, or much lower. Trust the bounce only if price can get back above 203.8 to put 205 or higher in play. 206.5, 208, 210, and 212 plus would be my targets for NVDA. Here is Amazon. We had this crazy gap up on Halloween, but there was profit taking, and it did look like it was going to drop some more, but the very next day it gapped up only for there to be intraday profit taking once again. But overall, it's just higher highs. Terrible daily chart price action, decent intraday price action, but it's bullish for sure. If we are to get a bounce from this gap down, I have resistance at 249.5 and 251. If those levels clear, we can go hit 252.7, 254, and 256 plus. But if there's more downside, if this gap down has some strength to push it even lower, then I need to see support at 248 and 245.4 fail. If that happens, 244, 242.5, 239, or much lower would be in play. We have gap downs. We have gaps around 232-ish, another gap around 227-ish. I would not be surprised if those gaps get filled, but price must stay below 249.5 to give the bears a chance to drop some more, because if that level gets recaptured, we'll likely be popping back to the upside to hit those levels that I mentioned. Meta, a beautiful price action intraday yesterday. I love trading Meta. It's a really nice one, but it's gapping down after a beautiful drop these last couple of days. Gapping down once again. Meta is not looking good. The bulls are having a rough time. Bears are having a good time though. If there is more downside, the levels that I'm watching watching are 627, 625, 623, and a fib level at 621.8. Those are the levels that must fail at least on a 15 to 30 minute chart intraday to trigger puts and give us a sign of more downside. If you're already swinging puts, you should be fine. You should be extra happy. But if it is time for a bounce, I need to see the resistance level at 630 clear. That would put 632, 635, and 636.5 in play. And that fib level at 636.5 held as support yesterday. So bears definitely want to see that level turn into resistance if it gets retested. However, if it recaptures, we're likely going to get a very nice pop back to the upside. 640, 648, and 656 would be my targets to the upside. So 636.5 would be today's equilibrium level. As long as below it, we are bearish. More downside is possible. But if it recaptures today, it's going to get in bounce mode, relief bounce mode. And bears really need some relief right now. Here is Microsoft, also looking a bit bearish after some selling this past week. The level that I'm watching as support for Microsoft is at 511 right now. And if that level fails, we're likely dropping down to 509, 507.2, and 506. If those levels fail, that's your sign, your price action indicator that we are dropping much lower. Now, what do bulls need to see to get a relief bounce going? I need to see 513, 515, and especially the fib level at 516.5 recapture. If those levels clear, it's bounce mode for Microsoft with 520 and 524 plus in play. We can expect more upside if 524 recaptures with 530, 531.4 or higher incoming. Here is Apple. It's been looking bearish these last couple of days, getting some selling pressure intraday. For the selling pressure to continue, I have a resistant level at 266.8. That is a fib level. If below that level and the 265 fib level fails, more downside incoming with 262.8, 261, and 259 or lower as my target. But if we are back above 266.8, I have a level at 268.6, 270, and 271.3. If those levels recapture, we can expect a bounce back to all-time highs for Apple. Otherwise, if 265 is lost, look to short some more. And here is IWM. I was watching some levels at 245 and 243.3, but we're below those levels now. And as long as below those levels, I would be bearish on IWM. This is a resistance level at 242 as well. So both need to clear 242, 243.3, and 245 if they want to get a bounce going, get a $5 to $10 pop back to the upside. But as long as below those levels, I'm bearish, and bearish follow through would be to break down the fib level at 240.8. If that level fails, 239, 237.5, 236, and 234 would be my next targets to the downside. And we must keep an eye on the VIX. If the VIX continues to pop up, the SPY will have volatility, and they tend to inverse each other. So if VIX is going up, SPY could be dropping down some more. I love to look at VIX to help gauge the SPY's price action. And I have resistance at 20.73. If that level clears, 22.3, 23.88, 25, 26.2, and 29 will be my targets to the upside. But if VIX is going to drop back down, support is at 18.78. That level yesterday held as resistant, but it'll need to hold as support if we want more upside for the VIX. But if it fails, 17.5 and 16 will be back in play. And of course, before I let you guys go, I love to show you guys the DarkPool levels. First one is at 681.88 with $861 million in premium. And the other one I like to show you is at 663.34 with $737.5 million in premium. Add these levels to your chart, label them DarkPool levels. This is what the big money players are getting busy at. And if we're below these levels, that would be very very bearish for the SPY. So they need to get price above these levels, especially 683.34, to get a bounce going back to the upside. Okay, so I hope you guys found value in today's video. I appreciate you guys for being here. And if you want more content from Uncle Chartist and take your trading to the next level, join my extended family in my Discord. Information is in the pinned comments below. It's also in the description of this video. Have a great day. I love y'all. Peace.